Okay, guys, I'm going to place an order to buy Japanese yen. The price I'm looking to buy 106.30. Okay, let's see. Well, let's move higher, 106.35. Okay, let's see if I will get filled price.
Is down by 15 and negative about 1/3 of 1%. Switch up the board and get to the bond market. There's the opening bell in New York City. Yields are up by 7 basis points to 144 on 10s, on 30s, 228, up around about 4 or 5 basis points there as well. In the FX market, the euro stronger, the dollar weaker. Euro dollar 122.24, up 0.5%. The ECB chief economist Philip Lane does not like what he sees. This market's not listening. The euro's stronger. Yields are higher in Europe too. In the commodity market, we just break 63, just a little bit, 62.99, and down by 0.4 of 1%. So that's the cross-asset story this Thursday. With your movers, here's Abby.
John, let's start out with the pain trade, and that is that big tech underperformance you were just outlining. The NASDAQ 100 actually put up a gain yesterday, but over the last 8 sessions, down, down, down. And this has everything to do with rates rising. So the big losers are your Apples, your Microsofts, and your Teslas, not because anything fundamentally has changed, but because investors think valuation now starts to look a little bit rich as you have this repricing of risk with rates higher. Apple, as I keep talking about, is below its 100-day moving average. That's a fancy way of saying momentum is going to the downside. Weak hands probably need to get flushed out. You could see more weakness ahead. Now, on that board, almost $5 trillion worth of companies trading there. On the next board, the meme stocks, it's pretty amazing. We're lucky if we have 40 million, but take a look at the speculation rampant again. GameStop, AMC Express, Costcorp, all trading higher, investors wanting to see whether or not they can make a buck here before the music stops again. Where the music keeps going and going and going, John, of course, it's the reflation trade, your energy stocks, and your bank stocks. Lots of gains here for the energy stocks, even though oil is higher on reflation expectations that all this stimulus is going to create economic growth. And there are the banks. These are the 2 best sectors on the year, as you know, up 30 and 20%. It is just incredible.
Abby, thank you. 2 minutes in, how many times have we seen this? The S&P 500 down by 1/3 of 1%. Bottom of the pile, information technology down 0.8 of 1%.
Okay, at last, position open on Japanese yen at 106.135. So all of you guys who follow this trade and want to buy Japanese yen, this is it. You got it. Well done. Good. Let's wait. How long? I'm wondering it will take us to get profit from this trade. I'll speak to you later.
2021, energy and financials, for example. This month alone, energy is actually beating the S&P 500 by more than 21 percentage points. That is the most on record for any month. At the same time this morning, you have financials trading at a record high. You have banks trading at the highest level since 2007. We are seeing a breakout on the back of rising yields. And if you actually look at how far some of these individual bank and energy companies have actually run from their lowest levels of the past year, the lows that they fell to after the post-COVID-19 sell-off, the comeback is all the more remarkable. Look at companies like Occidental Petroleum, up more than 230%. ConocoPhillips, up 160%. Bank of America, Citi shares, both have more than doubled, and the list goes on. Now, the reasoning behind this, well, expectations for more growth, the reflation trade, and yes, rising yields. 10-year yields now trading at a 1-year high. At the same time, you look at the run that we have seen in February alone, a rise of 40 basis points just about. That's the most for any month, going back to November of 2016, that presidential election back then, John.
Sarah, just unreal, these moves. Let's get that full screen alongside me again. Year to date, look at these moves. Up 32% on energy, up around about 22% on the banks. Year to date, it's February 25th. The moves have been absolutely phenomenal. Let's bring in the panel. Bank of America's Savita Subramaniam and Invesco's Brian Levitt. Now, Savita, you score these sectors in a particular way, and I want you to run us all through that and why the banks stand out so much.
Absolutely. So, you know, one of our quant models for sectors, what we do is we look at price momentum, earnings momentum, and valuation, those 3 factors. And a sector has to be attractive on all 3 to be considered a good opportunity. Right now, financials scores a perfect score on all three of those measures, which is very unusual. This has only happened to a few sectors over the last 20 years history of the model. So I think what we're seeing is that financials is really firing on all cylinders. We're seeing strong performance, as you pointed out, but we're also seeing the fundamental underpinnings of earnings revisions continue, and the valuation of the sector is still very attractive. So I think that there could be potentially a lot more to go as long as this reopening and cyclical recovery remain intact.
So, Brian, I want to bring you into the conversation, sir. You listened to Savita's argument. Does it resonate with you?
It does resonate. I mean, but I want to be clear. I mean, look, we're in a recovery trade, and this is the reflationary environment. It's playing out as most of us suspected that it would. You know, of all the indicators, the bond market gets it right most often. So steepening yield curve, very good for the more cyclical parts of the economy, very good for the more cyclical parts of the market. Obviously, a steeper yield curve, better for financials, better global growth, better for commodities in the energy sector. So all of that makes sense. And I think the challenge that investors have today, though, is whether we're changing our long-term structural views. To me, this is a recovery trade of a reasonable duration. It's more like a reversion to the mean from a very depressed level back to some semblance of normalcy. But the question is, do we go and sell all of our rate-sensitive sectors here? And yeah, I think what's happening in the tech sector is a consolidation, an assessment of where rates have gone, but it doesn't change the long-term structural story in this economy. So it's a reversion to the mean, but I don't think it changes the long-term narrative.
Savita, would you be sticking with this trade, and for how long? And I know that's a really complex question to ask, and maybe it's even a stupid one, but given the gains we've seen so far this year, when I asked that question, I've had two replies, one from Credit Suisse and another from Morgan Stanley, who both told me the allocation to this story is not as big as you think. Not many people are in with this. They haven't been riding this one, and they need to allocate to it soon. Do you agree with that?
I do. I mean, I think the pain trade this year has been not being tilted towards value. And, and it's obviously these sectors have run pretty aggressively, but I would watch three things. I would watch positioning, I would watch valuations, and I would watch the macro backdrop. Right now, all three of those are very, very favorable for value-oriented sectors like financials, like energy. Nobody has really moved there. So we're looking at the underperformance of a lot of active managers. Once we get to a point where this move is fully digested, folks get their portfolio allocations a little bit less underweight these sectors, and once we start to see valuations become a little bit more full, I think that's where you want to think about potentially moving towards the long-term winners, of technology, of some of these longer-term secular growth themes. But I think the other risk that we're not paying enough attention to is the potential for rates to rise faster than what we're anticipating. And right now, by our math, the market is pricing in about 1.4, 1.5% on the 10-year. And, we have a framework for thinking about this. What if rates move a lot higher than that over the year? I think that's where the pain could be felt in 2021. So I would stick with the value theme. I don't think it's done. I think, in fact, we're potentially in the early innings of that based on positioning and valuation.
So, Savita, this is important. So I know the house view is 175 on a US 10-year.
Yep.
Very constructive outlook for US growth as well. Let's put a few of these things together. Right now, yields are up for the right reasons in America. The banks like it. Do you think at some point we reach a tipping point where actually higher yields are more disruptive, even to the broader market, just more broadly?
Yeah, I mean, when we looked at this, we found that rates at about 3% is where you want to start really worrying. That's where asset allocators are likely to really meaningfully shift back to fixed income investments. So we've got a ways to go, and we're still in an environment that is relatively attractive for long duration stocks and for equities overall. But I think when we get to a 3 handle on the 10-year, that's where a lot of our indicators suggest that stocks could feel a little bit of pain.
So, Savita, final word on the year-end price target of 3,800. You and I were joking about this a few weeks ago because we went through it just like that. Right now on the S&P 500, not far off from it, I guess. You've maintained this view, even as this market absolutely surged. Can you walk me through it? Is it just a mechanical story, a weighting towards tech, away from the stuff that's winning? What is it?
Well, it's kind of like what's happening today. You've got the market, the S&P down a little bit, the NASDAQ down even more, the Russell's up. So I think that it's sort of, today is kind of a microcosm of what we could see throughout the next few quarters. Value taking the reins, smaller sectors in the S&P outperforming, larger sectors dropping and potentially derating. And that all spells a little bit of downside risk from here. The other worry I have is that the bull market in equities has been fully absorbed by Wall Street, and allocations are relatively high today. So I think that sentiment is quite bullish. In fact, we're one of the lowest targets on Wall Street. So I think that underscores the bullish sentiment across Wall Street.
Savita, good to catch up. As always,
Likewise.
Savita Subramaniam of Bank of America. Invesco's Brian Levitt will be sticking with us to run through the potential for tax hikes in America. Your market right now, that downdraft did not last long at all. About 10 minutes into the session, we're unchanged on the NASDAQ, and we're off by about 1/10% on the S&P. With your movers, here's Abby.
It does seem as though the buy the dippers are out there, John. Before we go macro, let's take a look at a couple of earnings stories because we do have earnings to take a look at. Moderna, those shares are trading higher after they put up a strong quarter. Their fourth quarter revenues beat, and they also have reached $18.4 billion in COVID vaccine deals. Wayfair soaring up about 12%. They posted a fourth quarter profit beat. To the downside, though, Best Buy disappointed. Their outlook was weak. And Plug Power, they missed revenue estimates, so that high flyer coming in a bit. As for what had been some of the down stocks on the day, I think that they're still down, but we've had a reversal for some tech stocks. These tech stocks are down, and the tech is still the weakest sector, even though by just slightly. NVIDIA, NTAP, they both put up quarters that disappointed in one way or the other. NTAP in particular, their outlook, the storage company, their outlook not great. And Tesla coming in once again, down 1.5%. As for the strength, it is, of course, the banks. That KBW Bank Index at another record high, up 1%. The regional banking index, those are the small banks that benefit even more from rising rates in terms of their lending activity, up 1%. JP Morgan, Bank of America, banks, climbing, John.
Climbing off the back of higher yields. Abby, thank you. Yields up by 6 basis points, call it 7, 144 on a 10-year, on a 30-year, 228, up 4 basis points on a session. Coming up, House Democrats releasing an updated stimulus proposal with a vote on the $1.9 trillion bill coming tomorrow. And maybe some tax hikes further down the road. We'll have that conversation with Invesco's Brian Levitt very shortly. 11 minutes into the session, equities recovering just a little bit. We're down about 1/10 on the S&P. Yields are higher, up 7 on a 10-year to 144, on a 30-year up to 228. This is Bloomberg.
I feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
As it has been reported widely, the Senate parliamentarian is hearing arguments today on the $15 minimum wage policy, included in the House version of the bill. According to the Congressional Budget Office, raising the federal minimum wage to $15 an hour has a significant budgetary impact, which should make it permissible under the Senate's reconciliation rules.
Senate Majority Leader Chuck Schumer making the case for Biden's minimum wage proposal. I want to bring in Bloomberg Chief Washington correspondent Kevin Cirilli for more. Kevin, the president going on tour to sell this plan. Walk us through it.
Well, two things. First and foremost, President Biden taking his pitch directly to mayors and state officials, as well as governors and tribal leaders, in an effort to test the waters on how well an infrastructure plan would sell after this nearly $1.9 trillion stimulus package likely passes sometime within the next 2 weeks, ending up on President Biden's desk. But secondly, and this is where the politics of this are really on a collision course with the policy, no matter how many local Republicans get on board with President Biden's infrastructure plan, here in the Senate, where I am, it's going to face an uphill battle with increasingly centrist Democrats raising the issue of whether or not the United States can afford another down payment after this nearly $2 trillion plan goes through. Either way, many folks are also wondering whether or not infrastructure will be able to pass at a time in which now the administration is also openly discussing advancing immigration. In terms of the next developments over the next couple of days, we're going to be carefully watching to see next week in the Senate where things stand on the issue pertaining to the minimum wage. That's been a key issue where Republicans seem to really want to lower that $15 an hour that's in the House version by 2025.
A huge debate about that, Kevin. The debate we're not having, and it's the debate we might be having further down the road later this year as the year grows older, tax hikes, corporate tax hikes. Chair Yellen's put that on the table. Secretary Yellen now has put that on the table in the past week. What's that conversation like at the moment, Kevin?
It's very divisive, and Republicans are suggesting that should they ultimately have to have that tax battle, that they feel the politics will lean in their favor heading into the midterm elections. So some interesting back and forth, but again, as I would note, the political capital that the Biden administration is expending to get the $1.9 trillion stimulus through is significant, and that could cost them among centrists when they're going to need people on their side, need senators in particular on their side in order to carry through additional parts of their agenda, such as tax hikes.
Kevin Cirilli down in D.C. Thank you, sir. Would you believe it? Could we really get to that position again, where former Treasury Secretary Larry Summers would be right that this maybe takes the oxygen out of the room because they're spending too much this time around and won't have the political space to do an infrastructure bill down the road? I think the corporate tax conversation is really important and one we should have right now. Invesco's Brian Levitt saying markets generally perform well under different tax regimes. And writes the following: there is little in the historical data to suggest that the US equity market has been primarily driven by changes in the tax code. We caution against drawing any hard conclusions on this analysis, as there's often many other factors at play, including the state of the economic cycle and the direction of monetary policy. Brian's back with us. Brian, I wanted to spend some time with you on this because it's a really important piece of research, your thoughts at the moment on this topic. Why is 2017-18 a bad parallel, the tax cut story? Why aren't we just reverse engineering that, so to speak, if the Democrats go ahead with this?
That's a very different part of the economic cycle. I mean, I was thinking about it while we were talking with Savita a few moments ago, and you know, the irony of financials and energy outperforming meaningfully during a unified Democrat government versus not performing well during most of the years of the Trump administration isn't lost on me. So I think investors, I've always said investors put far too much emphasis on the nation's politics. I mean, the reality is that when the Trump administration lowered the corporate tax rate, the idea was that was going to be a boon to smaller businesses. It was going to be a boon to value-oriented businesses, to you know, financials, energy, and that's not how it played out because of where we were in the cycle. We were later in the cycle. The Fed had been tightening monetary policy a bit, and the U.S. was sort of maligned in a slow growth, relatively benign inflation environment. And so, you know, to think that this time is going to be different, that didn't change the trajectory of the economy or the market. To think that this is going to change the trajectory of the economy, the market, to me, I believe it's overstating it.
As you look back in history, Brian, maybe 2013, recent history, if you go all the way back to coming out of the Second World War, is there a decent parallel there?
It's largely driven by where you are in the cycle. I mean, we saw rates come down in the 2000s under George W. Bush, but we were in a challenged economic backdrop in a secular bear market. We saw the Obama administration it let the Bush era tax cuts expire in 2013, and there was a lot of hand-wringing in 2013 around what that would mean for the markets, and the markets did just fine from 2013 on. So, again, I think a lot of it has to do with businesses knowing the rules of the game, not having significant uncertainty play out, and quite frankly, the Biden administration's only talking about taking the corporate tax rate back between where it is today and somewhere between where it is today and where it was in the Obama years. And most of those large businesses are not paying anywhere near that from an effective rate.
Brian, you keep going back to where we are in the cycle, and it's not just about where we are, it's the character of the cycle through the cycle overall. And you touched on this briefly about 10 minutes ago, so let's pick up on that point and explore it a little bit further. Will the nature and recovery that we're about to see, the character of this cycle, be any different to what we saw previously? And how would you apply that thinking to the parts of the equity market that will do well and the parts of the equity market that will not?
Yeah, it looks like it's going to be faster. I mean, the 2008-2009 environment, we did not have nearly as big of a disruption in economic activity, but we also came into it impaired. The financial sector was impaired, the household sector was impaired, and there was not a lot of political will for more fiscal support. This instance, the demand destruction was greater, so it's going to take some time, but we came into it healthier. The banking system better positioned, U.S. households better positioned, and more fiscal support. So it means a better recovery than what you saw in 08 and 09, and maybe it persists for longer. You're not going to see the austerity early on that you saw in the United States and Europe pretty soon after the recovery commenced. And so in my opinion, it's a recovery trade, it's a reflation trade. It plays out over a reasonable duration. My point earlier was just to say, let's not change our long-term views. Our long-term narratives don't change. It's a recovery that at some point gives way to another modest expansion. And another modest expansion means interest rates stay low and investors look for growth wherever they can find it.
Brian, good to see you. We'll continue the conversation. Brian Levitt there of Invesco. Looking at the story right now, the big question for markets, can we live with higher interest rates? The answer right now, and this is not a forecast, it's just the answer right now, is yes. We're down by 0.2% on the S&P. The NASDAQ is off by the same amount. With your sector price action at the market desk, here's Abby.
John, with that very small move lower for the S&P 500, not surprisingly, the sector action is not really risk on or risk off. It's neutral. In fact, it's jittery, as it feels like traders are jockeying for position. You can see about half the sectors are higher and then lower. The best sector, real estate, consumer staples, financials in there, but energy is down. It had been higher, so again, that jockeying for position. Tech, though, is firmly to the downside, down 0.7%. Let's go to where the juice is, though, relative to what you're talking about with rates. And if we take a look at a year-to-date sector check of the best sectors and the worst sectors, not surprisingly, energy and financials up top, having everything to do with the reflation trade. Rate-sensitive sectors, super interesting here. Utilities and consumer staples, those, of course, are sectors. Those stocks have very high dividends. So when yields climb, rates rise, those dividends look much less attractive. Those are the only two sectors down on the year. So to your point, yes, right now it is working out with these rising rates, just as it should be from a classic textbook standpoint, John.
Abby, thank you. I keep asking the same question day after day. How much juice is left to squeeze out of the banks trade? And day after day it goes up seemingly another 1%. Coming up, the market moving events you need to be watching. That'll be next in our trading diary from New York City this morning. Good morning. Yields moving higher. It's not about inflation worries right now. It's about growth hopes. Yields up 7 to 145. This is Bloomberg.
this is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Mercedes-Benz on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Equities are doing okay. Put it in a headline, we're okay. Right now, at least, anyway. The Nasdaq off by 1/3 of 1%, the S&P 500 off by 1/4. In the bond market, let's just sit there just for a moment. Yields are up 4 basis points on 2s, on 10s up by about 8 basis points. This is one central bank's statement of confidence. That's the Fed and the Treasury market. This is another central bank's undue tightening, unwarranted tightening of financial conditions. That's the view of the ECB, looking at yields up by 5 basis points, 6 basis points on a German 10-year. Over in Australia, up by 10, 11, 12. It's not what these central banks want to see. That tension's going to build in the weeks to come, maybe. That's one to watch. That's my theme of this morning. Let's get to the trading diary. What you need to be watching through this week. Pending home sales coming out at the top of the hour. President Biden meeting with US state governors later this afternoon, plus some Fed speak from President Jim Bullard and John Williams throughout the day. And rounding out the week on Friday, personal income, spending numbers, and the House voting on President Biden's stimulus package. From New York City this morning, good morning to you all. For our audience worldwide, this was the countdown to the open. Catch me on Twitter @FarrowTV to continue the conversation. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry Citi?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress. But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
Okay.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you,
millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Okay guys, I'm going to place a stop on profit for Japanese yen 106.55. Okay, So if you're looking to play stop on profit, basically you need to play stop on profit because you follow my trades. So the price, you need to play stop on profit 106.155. It means whatever happened, you will not lose this trade. Today is kind of a hectic day, so the prices, as you can see, we tried several times, 6 times probably, to enter euro position, and we couldn't. Just it's moving up and down, up and down. So be careful, and please do always place your stop on profit if you follow this strategy. Okay, I'll speak to you later, guys.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law, with its swagger and ill-fitting suits, caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty. The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. the former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier.
Okay, guys, it's time to move up your stop on profit to 106.185. Okay? So it's all about how much broker pays you per pip. If you trade on margin, you probably will get more. If you trade Forex per Japanese yen, you will get less. So you will calculate how much 5 pips will give you how much profit. Yep. By the way, with Japanese yen, it's 50 pips, right? Okay, I'll speak to you later. Good trade, well done. Every comes to him who waits, right?
Publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks. From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for Fifth Generation Mobile Network networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G...
Okay, guys. Position closed. That's right here, as you can see. And you can see how much profit you made already. After I will show you on screen how much we made a profit. It took us how long? It took from we purchased 2:30, right? It's spare, and right now what time? Right now 5 minutes to 4. About 2 hours. Made a profit. If you want to get a strategy, please use our ticker, red one, and you can see the address. You can go to company.co.uk website. You will find strategy we're using for years. So if you already have strategy, you know what to do. If you have any questions, please do not hesitate to contact us. You got our email, everything. Okay? Well done. Good trade today.
4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.